Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video we're going to be discussing natural gas, oil, and basically the energy market, XLE. I think there's some important movements that we really need to be taking advantage of and being aware of as the price action progresses. Obviously, natural gas had a phenomenal day today. It finally looks like it might be on the near-term rise. It's been building a beautiful basing formation. You can see it had a clear pop up. Massive consolidation, never ever really took out the lows. It did pierce them, but it never ever took out that immediate low that natural gas popped off of. So this is super bullish, healthy price action to see. Now, what is so bullish about today's price action? You had a gap up today, and the gap up was held, and you actually closed near the high, or actually pretty much at the high of the session. And there's a couple other bullish aspects as to what I'm seeing in this price action. For starters, you got a daily close above this consolidation. This was a big breakdown point where the bears in natural gas tried taking the price action lower, and you actually made a new nominal low with this wick over here, but it was reversed, which means that a lot of people were shaken out off of this final capitulation. And being the fact that we've had a beautiful surge to the upside, it likely means we're going to see more upside. Now, the thing about natural gas is we had a rip-roaring rally over here. We really need to see more of a stair-stepping consolidation move up. I'm not saying we can't get a move like this again because it is so oversold, but if we want the price action to maintain and keep stair-stepping its way up, we don't want to have a straight shot move like this. We want to have, another move up, consolidation, and another move up, consolidation. That stair-step pattern in order for the price action to be more sustainable over the long term. Now, being a trader, would I mind if natural gas shot up like this? Absolutely not. But considering I am starting to accumulate, or I have been accumulating a long core investment position, I wouldn't mind a more sustainable rally to the upside. Now, a couple of things I'm noticing. So, look at the blue moving average. This is the 20-day moving average. We're now closing back above that. We closed basically on Friday, right on that level, and we got follow through confirming above that key moving average. Then you throw in the 7-day moving average as well as the 50. So the 7 is the yellow one in the bottom here. You can see it in faint. It's now had a bullish crossover with the 20. That means that there's likely going to be more upside. And then look at the resistance we stopped at today, right at the 50. So now we're starting to brush up against the 50. And I think this time we're actually going to start closing above the 50 and then building a base off of the 50 to go higher. So notice how during this part of the rally here, it was rejected pretty much at that 50 daily moving average. The decline, so notice this 50 daily moving average decline. It's actually starting to have a much less steeper decline, and it's almost like a rounding formation is starting to occur. That is your first signal of short-term bullish accumulation in natural gas. So I'm remaining very bullish. I think the minimum, we're going to fill this gap around 3, and then I think based off of some bullish consolidation, we could actually get up to 437, and then probably in a couple years, even making new all-time highs. So again, beautiful to see natural gas rallying up 8.5%. And it's really matching that same lockstep movement of the US dollar, which we have discussed in numerous videos. Look at the move in the DXY, 2-bar surge. Look at the move in natural gas, also basically a 2-bar surge. And it is also happening on heavier volume. So the volume is starting to peak above the 20-day volume moving average, which is also another bullish aspect to natural gas. It certainly hasn't been an easy trade, and it likely won't be an easy trade moving forward. There's still going to be sellers, there's still going to be profit takers, but this is a weekly pattern with this weekly reversal, and it's also a monthly pattern. So give it time, give it really time. The one thing that remains skeptical is that options X is happening at the end of the week, which always leads to some crazy volatile price action. And could we make new lows in this trend? We absolutely could, but the big level is as long as we don't close on a monthly candle below this beautiful test candle bottoming tail. That is a beautiful epic bottoming tail, and that should hold as good technical support. All right, let's jump over to oil, because oil had a pretty hard reversal today. Look at that nasty reversal. And the interesting thing about oil reversing is it happened on a stronger manufacturing number. So with the US economy booming, Why oil reversed from the highs is because of the strong manufacturing data. The strong manufacturing data spiked interest rates and it spiked the dollar, and the reason that those specific asset classes yield spiked and the dollar spiked is because a stronger manufacturing sector, if it is on the mend, if it is rebounding, that is going to contribute to inflation. And with the dollar being the best performing asset in 2022 for inflation, if inflation starts to rear its ugly head again by stronger economy, higher energy prices, yields are going to have to stay higher for longer. The Fed is going to have to continue to be aggressive considering the economy is strong. But this type of reversal in oil is not healthy. Being the fact that you had your consolidation, broke out of that consolidation, we're putting in some more bullish consolidation, you actually made a new nominal high in the trend and then reversed and engulfed 1, 2, 3 days of price action and actually closed below this green bar impulse move. So that is bearish price action in the near term. You also closed back inside this wedge. If you get follow through tomorrow, the big level is, do we get a close below this green bar? If you get a close below this green bar, you're likely going to fill this gap around 75, and then we'll have to reassess from there. Obviously, if rates stay higher for longer and the dollar starts to move up again, I remain bearish on oil. At this point in time, it's still too early to tell. Oil's still putting in on the larger term time frame, the weekly chart. It's still acting okay. It still potentially could consolidate to move higher. But needless to say, that is a nasty daily reversal candle. And one of the only sectors, there were a couple sectors that were red today when the markets decided to rally and finish green. Energy. Look at this picture perfect retrace on the XLE. Retracing to the neckline breakdown zone, which you saw happen, this consolidation, a breakout which failed, sent you much lower. Energy is retraced all the way back up to the upside and getting stopped under this resistance trend line. And keep in mind, you're still inside of this huge reversal, this red bar sell-off over here. So all of this price action over the last 1, 2, 3, 4, 5, 6, 7, 8 trading sessions is still technically all bearish price action. And I still remain optimistic that you go and fill this gap around 83. And it is certainly going to have to coincide with a bigger decline in oil. And what's going to cause oil to fall sharply lower is likely a surging dollar, surging interest rates, and maybe a little bit more of weaker economic data as we progress. But really it's going to be paying attention to some of the leaders like XOM, which is still holding above this key trend line over here. If you lose this yellow trend line, the probabilities of you coming back down to about 107 is very likely on the chart. The best performing stock in the XLE has been MPC. MPC is putting in this upsloping wedge pattern. Notoriously, wedge patterns do have a higher degree of failure and cause patterns to break to the downside. Right now it's trading closer to the low end of the range versus the high end of the range. And notice how every time you made a higher high here, so here you had a high, you made a much more convincing high. Here you made a higher high, but it was not nearly as convincing as comparing this high to this high. So the trend is slowly, maybe on the precipice of slowly starting to roll over. We're just going to have to wait and see. But again, the big level is once we break down from this wedge pattern, then you likely will see a sharper move to the downside. And notice a couple of things I'm noticing on a candle pattern over here. This was your big sell-off. And ever since oil got that big pop on OPEC news, MPC has not been able to recapture this red bar high. So you had a big green bar, you had another red bar, green, a lot of consolidation, but you're still inside of this harder red sell-off, which means the bears are still in control of this price action in the near term. This is all inside bearish consolidation that is occurring. And it's definitely not been performing as well as some of the other energy stocks in the XLE. So definitely be mindful about energy because it is one of the last remaining sectors that are positive on the 1-year annual basis. And like I said, I've always been a big proponent that in a real bear market, you will see all sectors go negative. And realistically, energy is the only sector that we have not seen negative since this whole massive decline started in the late or the early sessions of 2022, late 2021. So again, if this is a true bear market, at some point we will see the XLE on an annual basis go negative. On that note, thank you all for tuning in. Please give this video a big like down below. Definitely check out our website, as we were able to close another winner today. It's certainly been a good profitable year so far. Hopefully we can continue the trends. We have had a little bit of a dip in the early stages of April, but I am firmly confident that we'll keep progressing and providing gains and actionable trades and information for our members. Nothing is financial advice here. You always have to do your own due diligence. I firmly would love critical feedback. I love when people challenge my personal opinions, my personal analysis, because at the end of the day, if you're not being challenged and everyone's inside of your echo chamber and agreeing with you, that's obviously when the market takes advantage of you, and that's when you typically don't become a better version, better trader, better investor. So definitely try to find people that disagree with you, because at the end of the day, those are going to be more of the educational aspects to learning, investing, and trading. Thank you all for tuning in, and we'll see you on the charts tomorrow.